Let's bring in Paul Sankey, Sankey Research President and lead analyst. The explosive attack, what happened from Ukraine to Russia over the weekend, is that having an impact?
Yeah, I think it is somewhat, definitely, because obviously the OPEC plans to increase are bearish
goes the other way.
Face value, so that's one thing. The other thing that's out there at the moment is wildfires in Canada. So we've had guidance from Synovus that they're going to be shutting down 250,000 barrels a day. So this is not this is material for the world oil market. So those things are all contributing this morning, very much so.
What generally is happening with oil? Because there's been this extreme downward pressure. Is that OPEC? Is that demand? How do you assess it?
Well, we're actually at a fascinating moment in global oil history here. We really are, because what you're seeing is the single biggest driver of the most important thing, which is demand, is China. And we think that peaked in 2023. So that's a massive moment in the past 25 years. At the same time, we're looking at the same for the US. So that was the original driver of the oil market, demand side. And then on the other side, on the supply side, what we're really looking for is the US to stop growing and start declining. And we've started that process. So that one's a 15-year cycle. The other two are arguably 30, 50-year cycles. And all of them are in rollover points. So at the moment, the next phase is how much does demand fall versus how much does supply fall. It's a battle between the two conflicting aspects of all this. As OPEC brings back in barrels to that weak market, it's bearish, but it's also using up OPEC's spare capacity. So this is a moment that most oil people have been desperate for, which is OPEC, bring the barrels back. Let's just go to all-out competition. Let's see how US supply holds up. And that's the inflection point that we're at. So it's a massive point in global oil.
Where are U.S. producers thinking, where are they thinking break even is at the moment?
Well, this is a really interesting point, because this is the first time I've seen the U.S. producers constrain capex in advance of a major down move. We haven't had the major down move. I mean, we're still at over 60.
Right.
And yet what they've done is a round of capex cuts and very defensive behavior already with strong balance sheets. So that's why the U.S. decline is hard to second guess, because the companies are in such good shape and so well managed. So it's going to be a real battle here.
When they say, don't watch the rig count, we're so efficient, has that metric become less reliable, do you think?
Somewhat, yeah. I mean, you've got two things. You've got the declining remaining productivity of the geology. So you're just running out of U.S. easy to find, easy to produce oil. But at the same time, the company's efficiencies, AI, all the other technology is getting much better. And so you're concentrating the sector into very strong, very big companies. All the kind of chaff that used to be highly levered, wildcatters type stuff, that's all, much more marginal now. And the U.S. is the biggest producer of oil and gas in the world.
You think we're going into a 15-year cycle of lower production in the U.S.? Isn't the president trying to do the opposite?
Yeah, exactly. And the question is, are we going to now steadily decline? And I think there's a real risk we will. Exxon are not going to decline, but the question is, can the rest of the industry sustain itself if oil's in the 50s? And the answer is no, you can't. We might see oil even below the 50s in the case of a full market share war with very weak demand. So it looks like it's peaked, and it probably peaked from a geological point of view for sure. So it's a really interesting dynamic. And if you look at Chinese demand peaking, that was 60-70% of all global oil demand growth over the past 15, 20 years. And if you look at U.S. supply peaking, that was 50, 60, 70% of all global supply growth. So it's an enormous moment in transition here in the global oil market.